Disney is a huge company that everybody knows. However, it only looks like Disney is going to get bigger and bigger, releasing tons of new features like Disney Plus, which has sent the stock price soaring to record highs for the company. I'm the Max Invest YouTube channel and I do daily deep dives and market updates. If you enjoy the video, remember to like and subscribe, and remember nothing said in this video is financial advice and you should always do your own research. Disney is an American diversified, multinational mass media and entertainment company. Disney was founded in 1923 in California and is a massive company with a market capitalization of $338 billion. This makes it one of the largest companies in the entire world. Disney generates its revenue through media, entertainment, parks, experiences, and products, so they have a wide range of diversified revenue sources. Of course, their parks and experiences haven't done quite as well this year because of the pandemic. However, that is then picked up by their media and entertainment, which has done very well during the pandemic. Disney Plus is their on-demand subscription-based streaming service, and in 2009, Disney acquired Marvel, and it also owns Star Wars and National Geographic, showing this company owns a ton of other companies that you may not have even knew it owned, and showing why Disney is such a large company. Alright, we'll begin by discussing Disney's parks and experiences as part of their revenue. The pandemic has had a concerning impact on Disney's physical parks because these parks have actually been shut down due to the pandemic. Of course, this is going to mean they get less revenue from the parks, from people buying the parks and buying stuff in them, as they have been shut down for the majority of this year. 70% of Disney's capital is actually spent on these parks, so this is one of their major expenses and is a lot more expensive to run than their other services. There are 12 different Disney parks globally, such as Hong Kong, Paris, Shanghai, Tokyo. So we do know Disney is all across the entire world and people can use Disney or Disney's services from anywhere. Disney also operate a cruise line and they have already begun advertising 2022 cruises, so Disney can somewhat be looked at as a recovery play in these areas. There are 7 types of cruise ships that Disney operate, ranging from a bunch of different themes, and they are quite creative with their cruise ships. And Disney also has 25 hotels globally. Disney management have also stated they are pleased by the future booking for Disney's parks. However, we do not know when the pandemic will end and the parks could stay depressed for quite a while. Now, one of the reasons that Disney's stock price has shot up so much this year is because of Disney Plus. Disney Plus is their new and revolutionary service that they've added, which has significantly helped the company in a time where many people are stuck in their homes. As we can see, it is an on-demand subscription-based streaming service. Disney Plus has 150,000 shows and movies, and Disney own a massive range of content, and they have owned this content for many years, owning tons of different companies like Marvel. So as we know, there will be a ton of content on Disney Plus, giving it a massive advantage. There's new content like The Mandalorian, which have been bought out and been very successful. And Disney also has a few other platforms such as ESPN, which is a sports-based streaming service, and Hulu, which is another on-demand streaming service. These platforms have amassed 130 million subscribers. And this is very large numbers, and it is a lot due to the people being stuck at home in the pandemic, and these sources of revenue have done very well. However, Disney does generally release content on linear networks first, like theaters and on TV. So it generally takes a little bit to get to these platforms. However, it is eventually all collected on these platforms for anyone to watch at any time. As we can see, Disney Plus has had 10 million sign-ups on day one, showing the service was extremely popular right from the beginning. And by January the 2nd, Disney Plus had 94.2 million members. As we can see, nearly all of Disney's streaming services have achieved what they wanted them to achieve by 2024. Disney Plus is already within that range. In fact, it's at the top end at 86.8 million, and since then they've upgraded this range massively to around 300 million. Hulu is also near that range, slightly off, and ESPN is well within that range. And we must remember, this was expected by 2024, so the streaming service has had massive success over the course of this year. Let's take a look at some of Disney's financials. Alright, so as we know, Disney has had a little bit of a drop-off in revenue this year. Its total revenue is $65.3 billion for the entire year, and this is a bit of a drop-off from 2019, which was around $69 billion. One of the big reasons for this is, of course, all of their parks and their physical entertainment. This has had a significant drop in revenue. Their revenue has, however, been picked up by their Disney Plus services and media services. However, the parks are still the main source of Disney's revenue, and this has caused a big drop in Disney's revenue over 2020. Disney's parks and experiences have dropped 53% in the last quarter of the year, and their media and entertainment has also dropped 5%, but a lot of that is due to no new movies coming out this year, or hardly any, and it has also been due to theaters and all that closing. However, their Disney Plus, which I will show you soon, has gone up in revenue substantially. Clearly, we can see Disneyland Resort was closed, their cruise businesses were closed, and this is the big reason as to why the parks and experiences have dropped off. However, direct-to-consumer revenues have increased 73% to $3.5 billion. This is because of the massive growth in Hulu, the massive growth in Disney Plus, and the massive growth in ESPN Plus. Of course, this has caused a massive increase in direct-to-consumer revenue. As we can see, Disney Plus's revenue since the last quarter has changed by well over 100%. In fact, it's nearly triple. We can also see ESPN's has significantly grown by 83%, and Hulu's has also grown substantially over the year, and this has helped Disney's share price skyrocket in the past year. Let's take a look at some of Disney Plus's growth prospects. Over the next couple of years, Disney will be releasing 10 Star Wars series, 10 Marvel series, and 30 other Disney features and series. Every single week, they will also be adding something new to the platform. So we can see Disney are constantly innovating and they are constantly growing their network into the future. Disneyland is also set to reopen in summer of 2021, and they will be getting back to normal with a lot of their theme parks and their resorts, which will help that portion of the revenue as well. They are actually currently taking reservations. Also, 112 hedge funds have Disney in their portfolios, showing they do believe Disney has the potential to grow substantially. Disney also believes this, as by 2024, they want to achieve 230 to 260 million Disney Plus subscribers. Disney also want to achieve overall 300 to 350 million total global subscriptions for these platforms. Of course, they're going to be having an annual recurring revenue for these given platforms, and this will help them substantially into the future, as you need to pay a subscription fee for all of these revenues, and 300 to 350 million subscribers paying roughly an $8 subscription fee per month will cause a lot of revenue to come in for Disney. Let's see what some of the analysts think for Disney. Now, they do believe Disney won't go as well in 2021, only having a bit of a pickup on revenue to around $68.73 billion on average. This is good as it's lifting up a bit, but they clearly don't have that much of, think that much of Disney due to the pandemic. However, by 2022, they believe this will pick up to 85.88 billion, which is some significant growth with a lot of things reopening in 2022. So it does look like Disney has a few years ahead of them of very good growth. Disney also appears to have a wide range of competitive advantages. It was founded in 1923 by Walt Disney. This means Disney has actually been in the space significantly longer than basically any other company that are competing with it, and they have a ton of experience, and they've had 7 CEOs over this period of time, and this does look good for Disney and puts it ahead of the competition. Of course, since they've been in this space for so long, they have that strong brand recognition and customer loyalty, which will help them raise prices without customers actually not going to Disney. Everyone's going to Disney when they go to America on holidays. You simply have to. They have the ability to raise prices and get in more profits. Disney has revenue equivalent to 1/3 of its 10 closest competitors, meaning it is actually the biggest company in its specific entertainment sector that it plays in by a mile. And there are a few other big companies, but Disney still dwarfs them regardless, allowing it to innovate at a faster rate than a lot of these competitors. Of course, Disney has unique and exclusive content and 150,000 of it. No other competitors really have this much quality content as Disney does. Disney has been making TV shows and TV series with its massive amount of networks for 100 years nearly. This means Disney has a big advantage in the content it has and the content it can put out on all of its services. Disney is also horizontally integrated. As we can see, it began with all the theme parks, but it's really moving into movies, TV, and now it's moving into subscription-based, and it can always do more. And I do love to see these big companies continuing to innovate over time. Now, Disney has a pretty good management team. As I've already said, it was founded by Walt Disney in 1923. However, he has been dead for quite a while now, so let's look at the current management team. And they are all actually pretty new, the management team in their current positions. A lot of them have actually been working at Disney for 30 or so years, but a lot of these positions have been taken in 2018 or 2019. Bob Chapek is the new CEO, and he assumed this role on February the 25th of 2020. He has, however, worked in Disney for 27 years and has some extensive experience in Disney. Bob Iger, who was the old CEO, recently stepped down, and I have actually seen a lot of people expressing concern for Bob Iger stepping down. He was the CEO for 15 years, and he managed to boost Disney's profits 300% in 15 years and did a range of innovative things like acquiring Marvel, acquiring National Geographic, and heaps of other stuff. So we are yet to see Bob Chapek prove himself as Bob Iger has, and I have seen many articles worried about this. Disney does, however, have some risks. Of course, the pandemic continuing is quite a big risk for Disney as it will affect these theme parks. Increased competition is another big risk, as the competition can take pieces out of the pie from Disney and drop their revenue if they come up enough. However, I do believe the biggest risk for Disney right now is the share price. Disney's share price has had a massive increase since March 2020, where it has increased from $85 all the way up to $183, and now it's sitting at around $190. This seems a little bit too high for a company that has had made a loss in revenue over the course of the year. Disney's revenue has gone down, yet its price has gone up. Of course, we know this is due to massive positive outlooks for their subscription-based streaming services. However, I'm not sure if these services can actually bring on enough revenue to justify Disney's current market cap and their current position with their price. So for me, Disney is personally not a buy right now. Maybe if it falls, it will become a buy. However, I don't believe in the price at this current moment. Of course, you should do your own research and decide for yourself. However, this is my personal outlook on Disney's valuation. Of course, if you like the video, remember to like and subscribe. and I will continue posting videos so you can keep watching them if you want to. Thanks for watching.